Hello guys, it's MSK here, and this video tutorial is sponsored by Kingsman Trading. So on this video, we're going to talk about the signal I gave today on Audusd. So we're going to talk about the analysis that is actually behind it. So let's dive into on Audusd. The reason I gave the signal is because we have a market that is advancing. Come here, you'll see the market accumulated from this point here. Market have accumulation from this point. After the accumulation, what do we say? The market advanced to the upside. Then it came here again. It came here again at this point. It also accumulated again. And mind, today is on the 4-hour time frame. It accumulated again, and then boom, it break out and it's advancing. So when the market gets to this point, is also this point after this accumulation, we have a distribution. If you're familiar with the market structure analogy, then you understand this. So we have this distribution here because after distribution, the market expanded. Now let me go to 1 hour, the 1 hour time frame for more clarity. So, and we all know expansion is like an imbalanced candle. When market is just like advancing or declining, then all of a sudden we just see a strong impulsive move with a candle like this. So after a market expand like this, market creates what we call mitigation block or breaker block. So normally we all know that liquidity is what drives the market. Liquidity is what drives the market. Let me turn off do not disturb. So we all know liquidity is what drives the market. And as we can see now, as markets expand to this level with this impulsive move, with this candle like this, I don't think there's anything that is going to attract the market to get to this point, because normally we're going to take our entry from this supply zone here, and this other block. We're going to take our entry from here, but liquidity is what drives the market. If in a situation whereby, let me cancel this for more clarity. So let me say in a situation whereby there's an inducement, we all know what an inducement is. Like let me say, okay, now market created this high here, then it came back down. Then after this market have like taken out this breaker block here, this one here now, this particular one, because this is a breaker block now. If market breaks down, then it's a valid breaker block. After market takes it down, then this particular up now, this point here, is going to be an inducement that might attract market to come up here to this point. But for now, there is no liquidity that is going to drive market to this point. So with this particular strategy, you take a look at this as a breaker block or mitigation block. So you look at it as just normal support and resistance. You know how support and resistance is treated, because we are going to look at, we'll look at this zone as our support, hoping that when market comes to this point here, it will bounce back and go up. Normal support and resistance strategy. But market broke down, and since there's nothing that is going to drive the market to this point, then we're going to take our entry here. So on this particular trade, I already took my entry as market came to this point, and I see that it's rejecting. And one thing you must know, markets like have different method of moving. Like there's actually an impulsive move, and when the market is just moving slowly. Let me show you something. So it's different from where market moves like this. There's a difference from when market moves like this, and then reach a particular point of interest, then it's going to drop down with a very strong impulsive move like this. There's actually a difference. And then when market drop down from an impulsive move like this, after market has dropped down from an impulsive move like this now, then you will not expect market to like immediately go up and retest this zone. No, because when market drops down with a strong impulsive move, it shows that the momentum at that particular period of time is too much, and market cannot just expand like this now and then just go back up to this zone. So what I see here is that, what I'm trying to explain is that as market expand like this now with this impulsive candle, and as you can see, this candle that is forming now is not impulsive. They are just going little by little. They are just creating. So this particular candlestick formation, it respects zone more than this impulsive candle. As you can see, the way this impulsive candle actually breaks this little support zone that is here, it just breaks it out, it just takes it out, and anybody that entered there is going to hit their stop loss massively. So there's a difference from when markets move impulsively like this. Market tends to not respect zones or point of interest when it moves impulsively like this, and then when it's moving like slowly, it's going up slowly like this, when it's just moving up slowly, when it's advancing. I don't know if you understand the terminology. So what I'm trying to let you guys know is that as I feel that market is moving slowly, getting to this particular mitigation block here, then it just gave me the confirmation that okay, price is going to respect this zone, and what we are going to see is another massive drop again. So this is actually an internal range liquidity. So normally our target is supposed, when we enter at this point, you put your stop loss right above this block here. Sorry about that. Normally we're supposed to like target the external range liquidity, but since the external range liquidity is very far, we're just going to look for a point of interest where market is most likely to come and retest. So that's why I targeted this other block that is down here, and then this just a normal 1 to 3 RR. Target a 1 to 3 RR, put our stop loss above the block, and we'll still even get this is actually a massive RR. We'll get about 1:5.6 RR. So let's just see how they plays out. I'm going to give you guys the update about the trade. So thank you guys for watching, and make sure you share this video so that more people can benefit from this knowledge, because I'm sure there's something that you're not very familiar with. So thank you guys for watching.